What's up guys, welcome to another free stock market breakdown video. In this breakdown, we're going to be taking a look at a few instruments where I see some trading opportunities opening up. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. Now I wanted to start off by doing a little bit more of a high level perspective of the S&P 500 just because now we're starting to see a significant breakdown below this uptrend of support that we had highlighted. So for you guys that have been following my channel for a while, you'll know that overall I'm bullish on the stock market. However, I do believe that there is going to be some form of significant correction at some point in the future. Now as traders and even as investors, it's hard to time or predict tops of markets. However, what we can do is highlight areas that we believe will act as a signal for the market to head significantly lower. And even though we are starting to see this sell-off and we have broken down below this uptrend of support that we had been respected from around the beginning of November, I don't think that this yet is the indicator for any serious massive sell-off to happen in the market. Actually, all we've really done is come down and retest the 50-period moving average on the daily chart. And for this reason, this actually confirms my bullish bias, and I will be looking at taking longs in the S&P 500 this week as a result of this occurrence. Now in terms of targets, I do plan to play it quite safe and to start trailing my stop if price does begin to move upwards from this level, because obviously we are in uncharted territories. And if you guys remember from my last video, I did state that I don't really have any targets above the 3,800 point level, which we hit already in our last trade that we took in the S&P 500. So what I will be doing if this trade does go in our favor is I will be bringing my stop to break even, and if price does continue to move upwards, I will be trailing my stop loss as price continues to move upwards. Now of course, with any trade idea, there is also a counter trend trade idea that is equally as likely to occur as our trade idea that we just highlighted. So if you guys aren't aware, but I'm pretty sure you are, we have had quite a significant week in the stock market last week with the GameStop revolution and a lot of Reddit traders on Wall Street bets looking to target major hedge funds who do have large long positions in indexes like the S&P 500 and its constituents like Apple, Amazon, Microsoft, and those big mega cap stocks. So I do believe that this sell-off was as a result of those companies having to dump some of their long positions in order to cover some of their losses from the shorts. But if the market does continue to sell off and eventually stop us out of this trade idea that we had highlighted, then I will be looking to take a more longer term short in the S&P 500. And what this would look like if I drop down to the 4-hour chart would be us targeting this major supply and demand zone that we broke out of after this major consolidation pattern that we had between September and November of last year. So if we do get that major breakdown below this level, I will be looking to target back this major level here once again for around a 2-to-1 risk to reward ratio. So that's the two scenarios that could play out in the S&P 500. But remember, the trend is your friend until it ends. And right now, I just see this pullback as a correction and not necessarily anything to be specifically worried about in the S&P 500. So overall, I'm still long. Now moving across to oil, as you guys would have known from my videos a couple of weeks ago, you'll know that I have a short bias in oil now that we officially hit our target profit level of around $53 for the instrument. Furthermore, I'm starting to see a lot of weakness enter the oil market, as you can see that over the past 3 weeks, and when this candlestick opens later on this evening, it will show further weakness entering the oil market for a nice shorting opportunity for us to take. Now with that being said, I am looking for oil to actually retest this $44 level, which we took the long for initially, just because we are trading in between the major moving averages, the 200 here in blue and the 50, and typically when we get in between these moving averages, we start to see some form of range bound price action. And that's just something that I've noticed from being a trader for quite a while, is that we do get some form of price action like that when this occurs. So if I drop down to the 4-hour time frame, which will be our execution time frame, I already have that trading idea highlighted out already. And as you can see from around the 12th of January, when we did break above this level of support that I did highlight when I first came out with the trade idea, we have continued to stay above this level for a while. But as you can see, we are starting to form somewhat of a wedge pattern from these highs here, and price has continuously made lower highs, forming this triangle pattern. So I am expecting, won't know if it will be this week or next week or the week after, but I am keeping quite a serious eye on this trade setup, as I do see this as one of the more high probability setups that I have in my arsenal right now. So obviously, just stating those entry criteria again, I am waiting for these Heikin-Ashi candlesticks to officially break and close underneath this level on the 4-hour time frame, and we will be taking the trade upon the retest of that level and carrying it down for people who are trading on the short term down to around the $50 level. Now moving across to one of my favorite instruments to trade, and that is gold. You guys will know from some of my previous videos that I have overall a long bias in this instrument. However, the short-term price action is showing me that gold is looking to be set to move lower, simply because we are still below this weekly 21 period moving average, and we still have the 50 period moving average down here trading at around 1790. So we did get a fake out above this weekly level, which is usually a good indicator of more downside. However, if we drop down to the 4-hour time frame, you will be able to see that we have been range bound since around the beginning of January. So typically speaking, whenever I see this type of range bound price action, I'm usually gearing up for an explosive move to either the upside or downside. And within my strategy, I don't usually trade range bound price action. So because we are sitting literally on this weekly level, and I do have a short bias, what I will be looking for is for price to break below this major level highlighted in blue and push down to retest this other weekly level that we have highlighted in our chart at around 1780. Now, it is important to note that we have to wait for confirmation of this trade idea, and that will require a complete break below the zone, similar to what we have here. But clearly this was a fake out and price quickly reversed back to the upside. But we will be waiting for some form of price action like that to confirm our thesis of a move lower, especially for the short term. And this will give people who are looking for that long-term opportunity that I highlighted last week opportunity to get involved into gold for the long term at a cheaper price. So this trade idea would give us around a 3-to-1 risk to reward ratio, which is quite healthy given that we will be being patient, waiting for this setup to play out. Now on the other side of the coin, we do have to consider the fact that we are long on gold overall, and so what would invalidate this short-term correction for gold, in my opinion, is if we get the same form of price action happening to the upside. And of course, this would signal to me specifically that we would be seeing gold long for quite a while after this, as we have been consolidating for quite a while. And I do believe if we do have an explosive move to the upside in gold in the short term, we should be seeing some form of long-term move to the upside in this instrument. So definitely keep in mind the fact that either of these two scenarios could play out. But just because of where price is on the lower time frames right now, I am looking at having a short-term pullback in this instrument. Now, gold is notorious for faking people out, which is why we have to wait for confirmation for any massive move to happen. So as you can see, when we did break above this blue level the last time, we did get quite a sizable push above before having the retest. So definitely be waiting for and expect some form of huge price movement below the level or above the level in this scenario to occur before executing or placing any limit orders to take the trade to the downside or the upside. And that's very important because, like I said, gold likes to fake people out, and it does so quite often. So we have to keep that in mind before taking any unnecessary trades in this instrument. And last but not least, I'm moving on to Bitcoin, which is our favorite cryptocurrency. And I've been doing a lot of videos about this instrument lately because I do find a lot of people are getting into the crypto markets and are interested on my opinion in what I think Bitcoin will do in both the short and the long term. Now, if you guys remember my last Bitcoin video, I did talk about Bitcoin having a serious correction, possibly pulling back to around $27,000, and my bias remains the same. And if we take a look at both the RSI and the MACD, we can see that we are still very overbought on the RSI, and the MACD is starting to curl over and show some form of weakness. So from my last video, I did mention that if Bitcoin's RSI reading was to pull back below 70, then that would indicate our buying opportunity. And also we are expecting this 21 exponential moving average to continue to push upwards and meet our $27,000 level exactly when we do have that retest of this blue level here. So when this new weekly candlestick opens in around 3 hours time, I am expecting that 21 exponential moving average to push up even further and us to open with a red Heikin-Ashi candlestick, therefore signifying further weakness in the instrument. Now, when we look at it on lower time frames, it's not as apparent what may take place just because of how strong this level here at around $30,000 has been for Bitcoin over the past couple of weeks. Now, even though this level is extremely strong, we do have to take into note this massive wick here on this Heikin-Ashi candlestick that did occur last week on the major market volatility. So clearly there is still a lot of selling pressure in Bitcoin right now, and for that same reason, that is why I maintain my short bias on Bitcoin for at least a short term. Now, I don't believe that we will pull back to $20,000. I think that any major move that we have in Bitcoin should allow us to quickly wick into this area, at which point I do believe that there are a lot of buy orders in this area, just because there's so many people looking to go longing Bitcoin at cheaper prices, that I do believe that any short-term market volatility that will bring price down into this level will be bought up very quickly by both institutional and retail investors looking to get long in this instrument. So if you are looking to get involved in this action, I would be having my buy orders here at around the $27,000 level, maybe even a little bit higher, just to ensure that your order gets filled with the extreme volatility that will likely come in this area. But overall, honestly, I am still expecting Bitcoin to remain consolidated over the next couple of weeks. Typically, Bitcoin's corrections last anywhere from around 21 to 48 days, and we have gone nowhere near that right now. We're only around 24 days, so we do have around another 14 to 24 days left in this correction cycle, which I do believe will end up playing out, especially given how aggressive we have rallied. So just be mindful for taking any short-term positions in Bitcoin, because typically this isn't a nice instrument to trade, especially when we are consolidating, as we do get these massive price swings happening that will stop you out quite quickly if you are looking to make a quick buck in these types of markets. Now, a lot of money can be made traded this type of volatility, but a lot of money can also be lost. So just be careful. Not something I recommend, but if it is something you do, just trade safe. And with that being said, this brings us to the end of our weekly stock market breakdown video. So thank you to all who took the time out to watch this video, and an even bigger thank you to you guys who made it to the end of this video. I've definitely planned on doing more videos analyzing these instruments on a more frequent basis, so make sure that you subscribe to my channel so that you can keep up to date with all the future content that I'm going to be posting. If you found this video useful, support us by dropping a like on the video so that the YouTube algorithm can help us reach more people. Thanks, and peace out.